Welcome back to the channel. Today, I wanted to cover a topic that actually comes up in the comments quite a bit. It's honestly a fair question, and it's about taxes. With all this kind of distribution and dividend income coming in, I think that's a fair thing to ask about, and also it's a fair assumption to think that like the taxes will be pretty high since that's quite a bit coming in. So like I'm at least right now I'm slated to have like over 60K coming in this year. So yeah, let's dive right in. First, of course, I'm just gonna do the recap for anyone that's new or anyone that needs a refresher. So on my channel, I fully live out of my Robinhood brokerage account and I invest 100% of my paycheck. So the paycheck rolls in, that goes straight to the brokerage account. That splits into two buckets, a growth and dividend growth side, which I'm hoping never to sell. That's like about $4,000. And then a high yield income side, which is like $6,800 that goes towards that. I invested in things like XPay, YMAX, and also single stock stuff like Hui. And that's kind of that's making a snowballing monthly dividend that's growing roughly by $300 a month. And the kind of cycle repeats itself as far as it paying down the margin and kind of staying in the portfolio. So what happens there is that I basically treat my brokerage like a bank account. So I'm kind of getting all that yield and then I'm basically giving myself that interest. So I'm borrowing that against the assets of the full assets in the brokerage. So I'm taking out roughly about $9,000 a month for my expenses. Net after the deposits of the dividends though, that's about 4.1K a month. So that pays the bills and all my monthly expenses. And really I just kind of rinse and repeat that every month. So this should have like a really big compounding effect, hopefully. That's the idea. And hopefully that'll help me reach 5x40. So again, none of this is financial advice. This is really just for entertainment purposes only. Really for you to see whether I make it with this crazy strategy or not. So really do your own research. It's a very high risk strategy that I'm running given the margin. So yeah, I'm just some guy. I'm not a financial professional at all. So as far as the topic of taxes, let's dive right in. Yeah, I guess we'll pop over here and we'll talk over this after, but like, yeah, I guess the first thing I wanted to say is that I almost see kind of like these distributions as a second job that's producing income, right? So in my mind, I almost see it as like, would you say no to an extra 59K a year on top of your current salary as like a raise or anything that's taxed at ordinary income rates? So I think most people probably would say no to that. You wouldn't turn down a job because you're like, you're giving me a 60K raise. That's going to put my taxes up this year. So yeah, that's how I see that as far as like, should I or should I not get this income, right? So yeah, but the big thing is that I'm honestly not worried about taxes because since 2020, or at least I'm not yet. That's the caveat there, not yet. Just because I'm itemizing my dividends, my deductions since 2020 when I started my side business. So that started with like kind of just like career related side gig that I've been doing since 2020. And then now as I've kind of reached monetization thresholds, soon I'll be getting YouTube income, which fits into entertainment related deductions as well. But yeah, so between that, so that like there's like up to 25 to 30K I can deduct every year. So that's like things like the office portion of the house. That's that part of the mortgage, or if you're an apartment rent. I used to do it when I was renting. Computer hardware, reference movies, reference books, reference strips, streaming services, things like that. That's all deductible because it's all kind of falls into the bucket of entertainment related deductions. The entertainment bucket's like really large, which is really nice. So yeah, I actually track all my expenses for my business expenses. So like, yeah, just all my credit card purchases, things like that. So you'll kind of see there, those all get categorized. And yeah, so like stuff with like cloud storage, internet, reference materials, subscriptions, telephone. Some of it's prorated, some of it's not, like as far as like the mortgage and telephone utilities and stuff for the office. And so yeah, like roughly that amounts to about 30K. This was last year. Some other years I've had 25K or whatnot, or 20K. But the idea is that this needs to be above the standard deduction. I forget what it's at right now. It's like 14K or something like that. And not all of this is actually eligible fully. Like the mortgage rent stuff. Like honestly, I work with a tax consultant for all of this. So ever since I started doing the side business stuff and these deductions, just to make sure it's all done above board. And I recommend you do work with someone like that if you do anything like this, just so it's all done properly. So yeah, but like up to 30K could potentially be deducted. It's not all of it that gets taken into account, but this is what I send over, and then the accountant does their thing to really fix it up. So yeah, but on top of that, there's quite a bit more deductions. So like once you have a house, you can actually deduct your mortgage interest, and that's a good chunk. That's like about 25K. I forget if they use that full amount or not. Same for property taxes. This year I got a HELOC to do some renovations in the house, and so that's another 4K there that I could deduct. And then also, you may not know this, but margin interest from your brokerage, that's actually also tax deductible. So that can help offset any dividends that I'm getting there too. And then also I do have some carryover losses that I'm still carrying from the last few years. And this is probably a whole other video about a mistake, but I got some stock losses back in 2022 when I sold some stock to basically buy the house I'm currently in. So that was like a 16K loss that I can deduct 3K of that a year essentially. So there's 9K of that that's still left. And then finally, for a good chunk of the distribution income, a lot of it is ROC, or return of capital. I know some people think that's bad sometimes. They say they're giving your own money back, blah, blah, blah. But honestly, it's a tax classification, and it's actually, I think, a good thing, because that makes it that, like, if a good chunk of it is ROC, that means it's tax free. So if once you're, like, say you put in $1,000, right? That's the ugliest $1,000 ever. If you put in $1,000 that you invested, right, and you get paid like $100 dividend a month, so like in 10 months, you'd basically reach $0 cost basis. So that's when you'd get taxed on that. But in the meantime, during those 10 months, that's all tax free. Or if you sell, this is how I understand it for ROC. But ideally, I'm going to keep adding to this, right? I'm not going to, so the cost basis hopefully wouldn't reach 0 for a bit. And ideally, I'm not going to sell. So that's for ROC. So, and a good chunk of the distributions, like for Alti or for YMAX or whatnot, are ROC. And also, you got to note too that like that's all like Yield Max and Round Hill and whatnot. That's all estimates that they give during the year. Like you'll get the true number at the end of the year, just because like it could be a thing where they estimate like 90% or 100, and then at the end they have like a big gain, and that offsets all of that. So something to keep in mind. But yeah, that's why I'm not so worried about taxes yet. My plan really is to like, yeah, just kind of see how this year goes, because the first year of doing this, and then if there is a big bill, we'll see. But I think just to give you an idea is that, so for the last 5 years, so this has been my refunds and money owed to the IRS over the last 5 years. So even you can kind of see here, so AGI is adjusted gross income. So that's your income after all your deductions and stuff like that. And I'm just kind of putting in the base salary that I had that year, or just my W-2 income. So yeah, you can kind of see here how like, yeah, I owed 1.2K 1 year, 1.8K. And then you can see that my AGI actually jumped, and this didn't jump so much. So the deductions are doing a lot of work to offset things. And then over here, I got my first refund in a while. And that was a 2.4K refund in 2022. And this was actually my biggest earning year yet, because I had a bunch of stock and ESPP that I got that year at my job. So I sold a lot. And so that bumped up my thing quite a bit. But that was also the year that I got my house. So I got a portion of the year where I had like those deductions I could make. So that got me my first refund. And then that's only kind of like grown. In 2023, I changed jobs, and I actually took a pretty big pay cut to take that job to move up here to Washington. But that made it so that my refund was pretty big given the house stuff. And then last year was actually my biggest refund yet. I got a 12K refund because that was my first, I guess my second full year of the house, and then quite a bit of deductions and things like that. So yeah, you can kind of see the progression from like 174K G07, 266 in 2022, 124 in 2023, and then 180. So like potentially in 2025, my base salary is going to be like 205K. So that's my base salary plus annual bonus. And then, so let's say like maybe 60K for dividends potentially. So that's still like 265 potentially. And then you got to calculate all the deductions, right? So, this is beautiful mouse art. So my AGI will definitely not be like 265. That'll come down quite a bit from all these deductions, right? But yeah, so I'm not worried about it just yet. I'm just going to let this year play out, get all the deductions in, and see how bad it is. If my highest earning year from 2022 is anything to go by, this is hopefully won't be too bad, because I think it'll be pretty close to this, or maybe lower than this. So I feel like maybe if I owe something, it'll be like in the couple of thousand range, worst case. But I'm pretty sure I'll probably get a refund, but we'll see. So, and again, I have to mention it that like, yeah, I'm not doing any of this myself. I wouldn't trust myself to do it properly in like TurboTax or whatnot. Like I used to do TurboTax before I started getting side income and doing deductions like this. But yeah, I've done all this with hiring a tax professional every year that specializes in entertainment deductions. Work with a great company out of LA, and I think that's really important to do, especially to just keep everything above board and done properly. So definitely keep an eye on that if you do this. But yeah, but that's the video today. It's actually just like a relatively quick one. Hope that was useful and you can kind of understand why I'm not worried about taxes just yet this year. So this will be another good video to link to people in case the tax question comes up. But yeah, as usual, if you want to follow along my portfolio, in the description for every video, you'll see that I have a link to my Snowball portfolio and then also my Blossom Social profile. So Snowball Analytics link will bring you to this. And yeah, this is just my portfolio, fully transparent for you to see all my real numbers, my real percentages. Yeah, you can kind of see how I have stuff split up between the high yield and the growth, between the anchors and the ETFs. My total profit here, including dividends. So yeah, you can kind of just see that. Love being transparent with you all, and definitely just take a peek at that. It's personally, I love seeing graphs and stats and stuff like that. I'm definitely a stats nerd, so that's why I really like using Snowball. So yeah, and then also my Blossom Social. Give me a follow there if you're on there. It's a great little platform, social media platform, purely for investing, which is nice. Kind of nice to get away from the normal social media stuff and just focus on this. So yeah, I'm on there and post my YouTube updates. You can see all my trades as well too, which is great to see. And I still need to be more active here as far as posting about trades and all that. But yeah, building up that thing. So thanks again for watching, and like and subscribe if you found this video useful. And I'll catch you in the next one. Have a good day.